Hi, welcome to this episode of Talking Tax with Alex. Today's episode, I'm going to do a court case analysis. I haven't done one of these in a long time, and I figured it's time to take a look and see what we can learn from tax court cases that got resolved. So in this episode today, I'm going to talk about why did I choose this case, what happened in the case, what are the issues, how did the court rule, and some closing thoughts. So the court case in question is Scott Moore Edux versus Commissioner. I chose this case because it deals with the R&D tax credit. And so Scott Moore and I forgot his wife's name, Mrs. Moore, own a company, and that company is a pass-through entity, and it claimed an R&D credit. That credit went onto their personal return. That's why they are the respondents on this case. So this court case deals with the 2014-2015 tax year, and the taxpayers, through their pass-through entity, through their company, manufacture athletic event scoreboards, like at baseball, basketball events. The deficiency assessed by the IRS was a $68,000 and $142,000 R&D credit disallowance for 2014 and 2015. Senior management, the players in this case is Mrs. Moore, who's the owner, Mr. Robert, who is the COO and president, and Mr. Pasley, who is the engineering director. And so sequentially, Mrs. Moore, the owner, then Mr. Robert is the COO and president, so he reports to Mrs. Moore, and then Mr. Pasley reports to Mr. Robert. Mr. Pasley has a bunch of engineers that work for him underneath, and so they report to him. So that's a chain of command. This is important for later. The wages for the R&D credit. So I'm not going to go too deep into the R&D credit. It's a very complex part of the tax law, but wages are a large contributing factor into calculating the R&D credit. And Mr. Roberts, the COO, you can see was paid wages as follows. So he got a base pay of $85,000 plus a bonus of $253,000 in 2014, a base pay of $179,000, and then a bonus of $1.89 million in 2015, and 65% of his wages were allocated to R&D. This is important because the company was effectively paying Mr. Roberts a lot of money so that it could factor that wage into their R&D credit calculation. And as I said, the chain of command, Mr. Roberts oversaw 6 others, and Mr. Pasley oversaw 6 to 10 engineers. And Mr. Pasley reported to Mr. Roberts. Mr. Roberts reported to Mrs. Moore. This is important for later, so just remember why we're talking about the chain of command. So the issues are qualified services defined for the R&D tax credit. So qualified services must pass the 4 tests of the R&D credit. We'll cover that in just a second. And qualified services, you must be engaging, qualified services, you must be engaged in qualified services as defined by the tax code, or you must be engaging in direct supervision or direct support of qualified research. So there's a lot of, I'm saying qualified a lot because R&D defines what is qualified activity, what it counts towards, what projects or what you're doing in a company that you can then count the wages for those employees for the tax credit calculation. So it must be qualified. I know I'm saying qualified a lot. So the 4 tests for the R&D tax credit are Section 174 research and experimental test, also known as the uncertainty test. So the tasks, the time spent by employees that you're paying wages to must be done for tasks that are research and experimental in nature, that they're uncovering uncertainty for the business. They must be technological in nature. So they must be, easy way to remember this is they must deal with STEM, basically. The sciences, physics, biology, chemistry, that kind of stuff. It can't deal with economics, sociology, that kind of stuff. It has to be hard sciences. The business component test. So while you're doing all this activity, it must be for a component of your business. So you were trying to improve or make better a product or whatever that you're making. And then there must be a process of experimentation in this activity. So it's not good enough that you just went and did something unknown that was based in chemistry and it was for your business, but there had to be a process where you experimented, you tried different alternatives, and you came to the best. And then you have to support all of this. So it's really important in the R&D tax credit world that you document all of this, because you then have to allocate people's wages and time to support what you're claiming the credit for. And so the court case ruled that Mr. Roberts' work was not qualified research, even though, and I'm kind of cutting through a lot of the court case here because I'm just trying to summarize it, but even though the taxpayer projects were qualified research projects. So they listed out 4 projects that Mr. Roberts was the driving the initiative for improving their athletic scoreboards, or for improving their athletic scoreboards, whether it be by having trusts that hold it better, or programming it better, or something like that. Mr. Roberts was heading up these projects. And he even had some direct supervision applied. So he was even involved in these projects as a direct supervisor. Why his time was not qualified is because the courts had no basis for estimating time spent. And this is I guess something that I didn't cover in the facts and circumstances, but it came out in the court case, is that the company was so small, they didn't keep good logs and records. They didn't have logs and records and descriptions of job duties and responsibilities, who spent what time on projects. So even though the court acknowledged through testimony and fact gathering that Mr. Roberts was indeed involved in these projects, there was no basis for coming up with a number for how much wages that they could use. And if you remember from a couple slides ago, they allocated, the taxpayers allocated 65% of Mr. Roberts' time and wages to these projects. But there was no logs, no records, no way to prove it. And so the courts basically said that, we have no way to prove this and we can't support it, therefore we can't allow any of it. And the further complicated things, remember I was talking about the chain of command? Well, Mr. Roberts, since he was the COO and president, he was in, basically second level management. He had Mr. Pasley, the director of engineering, report to him directly. And so in the R&D tax world, for wages to qualify, only those employees that work on the qualified projects, like engineers and their direct supervisors, so in this case it'd be Mr. Pasley's wages, who would qualify for the R&D credit. Mr. Roberts would have to establish that he was a direct supervisor of the engineers with, records, facts, and circumstances, etc. And all of that was missing. So even based on just a good faith understanding of the operations of this business, Mr. Pasley, the director of engineering, he had all the engineers reporting to him. So it was a tough case for the taxpayers to make that Mr. Roberts was the direct supervisor of all the engineers. He might have been the direct supervisor of Mr. Pasley, but being a second level supervisor doesn't count for wages for the R&D credit. And then the last argument that the taxpayers try to say is that Mr. Roberts was working as a direct support for the R&D projects, for the qualified projects, and that just doesn't fly. Direct support for the R&D world is more like, think of the janitorial staff, the clerical staff. If an engineer or a chemist needed somebody to help them, duplicate logs so that they can share their research amongst their peers in another, in a similar department or something like that. It would be the support staff, not Mr. Roberts' position as a COO and president. He's not, even though, in layman's terms, maybe he is supporting them. Maybe he's a supportive boss, but the R&D tax code is very specific. Direct support is the support, like clerical and janitorial support. So that's it. I'm going to wrap this one up. It was a short case. I tried to summarize it as best I can, cut out the fluff. Closing thoughts, the R&D tax credit, something to remember is that second level management doesn't qualify. So if you have like the chief executive suite, the CFO, CEO, COO in a medium-sized company. So if your company is really small, like maybe 10 people or less, and there's no middle management, then you probably have a stronger case, that the owner, CEO, or COO or whoever is really involved in the projects. But once there's a second level of management, there's middle management, it becomes a really hard case, and you need to have records that show it. The R&D tax credits are very complicated. Something I noticed in this case too is they didn't have an R&D study done, which I know costs a lot of money in today's world, but it's one of those things where you pay for the study, and those are your records and documentation for when you get audited. And then my last takeaway is just to keep good records. I mean, this case fell apart because they didn't have records, so they're just trying to argue their case in good faith, and the courts ultimately said we just don't have enough to even come up with an estimate. Sorry. So that's it for this episode. If you like this video, if you like this content, please like the video, subscribe to my channel, and comment or email me your thoughts. Thank you. Bye-bye.